Hi, it's Robert Weinberg, your mortgage advisor and financial coach. I want to talk about down payment ideas and best practices. Now, the most common way that people get money to buy a home is what you're thinking: their checking account, their savings account, money market, or bank accounts. If you're somebody who has a high income, low expenses, or you're good at saving over time, then you might be fortunate enough to have money saved in one of your bank accounts. But my assumption is if you're watching this video, you're looking for some more unconventional methods and outside the box strategies that could allow you to come up with a down payment. So one of the most common recently is tax refunds. So right now it's May 2019. Last month was when taxes were due. So I have a lot of buyers using the tax refund that they received from the IRS to take care of some of, if not all, of the money they need towards a down payment and closing costs. Tax refunds can range from a couple $100s to thousands. I've even seen some over $10,000 or more. So as I mentioned, that can be used to fund most, if not all, of the money that you need to close. Another outside of the box method a lot of people don't think of is using retirement funds. So most retirement administrators have made the ability to either borrow or withdraw money from your retirement account like 401k, IRA, etc. You'll want to contact your retirement administrator to get the specifics, but you can typically either withdraw or take a loan for money that you may need towards the purchase of your home. Another great way and place to find money is brokerage accounts. A lot of people have an old account that they were trading stocks or mutual funds, bonds, that sort of thing. Maybe it's got a few $1,000s or more in there and you've forgotten about it. You can actually use the money from there by liquidating positions. You don't have to use the whole account, but you can just use some if you're somebody that has a brokerage account with one of the online brokerages or any brokerage for that matter. The most common there would be like Vanguard, Scottrade, E-Trade, TD Ameritrade, and any of those brokerage firms. A great way that's outside of the box is selling items. So you may be somebody who's got some things in your house that are just collecting dust. And these items could be sold online on these marketplaces like Craigslist, eBay, or Facebook Marketplace. And you can use these items to raise money that'll help you towards your down payment. So documentation is key with this method. If you're going to sell items, it's very important that you get a listing or a copy of the listing that you're putting online, as well as a receipt for the person that's buying your item to show that they took possession and how much they paid. That can then be matched up with the deposit in your bank account and shown to your loan officer or your underwriter so that they can see and source where that money came from. So selling items that are not needed anymore is a great practice. Gifts. So a lot of buyers don't realize you're able to get a gift from a family member. It's very common, especially with first-time buyers, to have family help out with the home purchase. Almost all loan programs do allow for some sort of gift. So like I said, it has to be a family member, brother, sister, mom, dad, grandma, grandpa, aunt, uncle, cousin. It cannot be just a friend or a coworker. In a lot of cases, relative is the only way. I've seen some circumstances where an underwriter will allow a friend to give a gift, but there's some more extensive documentation required to show the proof of the long-term relationship that you've had with that person. So again, rule of thumb is that it's just got to be a blood relative. There are some specific documentation requirements when you're getting a gift you'll want to discuss with your mortgage advisor or loan processor, and also the timing of the gift. So the easiest way is to not just have them give you the money before closing, but what I advise all my buyers is actually have them send the money directly to the title company or attorney who's doing your closing. That can actually streamline the process and make the documentation requirements that much easier. Now, you as the one who's getting the gift, as well as the person giving the gift, will have to sign a gift letter that outlines who they are, their relationship to you, name, address, and the fact that there is no repayment expected of the gift. Equity utilization is a more unconventional way that many people have used in order to purchase a second or third property or beyond. So if you're someone who already owns a home or maybe a few properties, you've got some equity built up and you're going to keep the property, you may be able to use a cash out refinance or a home equity line of credit in order to tap the equity in one of your properties and use that money to go and fund the purchase of another property. This is a more advanced strategy that a lot of successful real estate investors and would-be real estate moguls use to accumulate multiple properties. And this is, again, when it really pays to have a good mortgage advisor in your corner that can help look at all your different assets and look for those opportunities that might allow you to utilize unused equity in your properties to fund another property purchase. So best practices when it comes to down payments are you don't want to put a huge sum of money in at one time in your bank account. So what we call excessive large deposits. Typically excessive is going to mean anything more than 25% of your monthly income gross. So if you make $4,000 a month before taxes, it would be considered an excessive deposit if you put money in that's more than $1,000, which is 25% of your monthly gross income. So you want to refrain from doing that. And if you do have to make a big deposit, talk to your mortgage advisor first so they can explain to you what documentation will be required so you don't have any last minute issues in underwriting. Another thing is you don't want to make any large purchases while you're in the process of buying a home. So when underwriters see thousands of dollars coming out of your account, it can definitely be a red flag to them and wonder where that money's going. Not to mention, it will deplete the money that you have available towards your down payment and closing. So you want to refrain from making large purchases after you're in process of your mortgage application. And last but not least is avoid applying for excessive credit or any credit for that matter. Once you're under contract on a home, you need to understand that you're under the microscope financially. The underwriters will do a final credit check a couple days before closing, and if they see that you've applied for any type of accounts, that's going to throw up a red flag and they're going to require explanation. Worst case scenario, it could actually make it so your loan application is denied instead of approved. So don't apply for credit cards, charge cards, student loans, auto loans, mortgages, lines of credit of any type at all, unless you've spoken to your loan officer or mortgage advisor first and they know what's going on. So again, rule of thumb is just don't apply for anything because it'll make it that much easier at the end of your loan process so everything goes smoothly. Hope this has been of value to you. If you need a consultation or have any questions about the home buying process, I'm happy to help. You can either reach out to me on social media or you can contact my office by phone or text. The number is 860-413-3938. Take care.